Good to see that we've managed to increase our production again this quarter, up to 566,000 ounces. Still making cash, $47 million of cash flow. Costs again down, $942 an ounce. And that puts us, I think, pretty close to the bottom of the cost curve. Normalized earnings, $15 million. We've paid a dividend. We've stuck to the policy. Our commitment's been to pay between 25 and 35% of earnings as dividends. We've done that, so shareholders will get a nice dividend. Net debt decreased by $47 million. We continue to drive our debt down. We want to get to 1 times EBITDA if we can. That was a target we'd set for 16. Whether or not we can get there is debatable, but we're going to continue driving the debt down. South Deep, one of the highlights is we got the production up 24% this quarter. That's on the back of a 42% increase in Q3. So if you look at second half 15 against first half, we're up about 70% on production. Guidance for 2016, we're looking at between 2.05 and 2.1 million ounces at costs that are very similar to 2015. Over the period of 3 years, we've picked up. Gold price has obviously been coming down, but you can see the costs have been coming down more than the gold price. We're down probably about $400 per ounce. Currencies have helped us over the last year, and inflation has been benign. You're able to employ people now at less than what you paid 3 years ago, which is quite amazing, and contractors have pulled back costs. We've said a number of years ago, it's not about ounces, it's actually about making cash. And we moved the strategy. We stopped all of the projects division, we stopped greenfields exploration, we stopped marginal production, and guess what? We started making money. The balance sheet, we're comfortable. We don't have any near-term maturities. The first maturity only comes in 17. We've got lots of headroom. We have the flexibility and the liquidity to withstand a lower price. South Deep, let's look first of all at that operation. As you can see in Q4, we went up to 68,000 ounces, and you can see the enormous impact it has on costs. Costs have come down to $11.56. You know, that's obviously at a rand-dollar exchange rate of around about 14, not the spot rate. And that came down from 14.31 the previous quarter. So that's a big decrease that we've seen. And given the fact that about 75 to 80% of the costs are fixed in the short run, the extra production comes through to the bottom line at a very low cost. Safety has been the backbone of all of this. If you get safety right on an operation, you'll generally find that the production follows. We've moved to a new type of mining, to high-profile de-stress instead of low-profile de-stress, and the early signs are encouraging. We're targeting break-even by the end of 16, and you can see over here as well the significant reduction in cash outburn over the year, down to just under 60 million rand in Q4, and obviously the gold price in rand terms is certainly helping us. So let's see. We'll obviously try and get there quicker, but we have to be careful for the impact of the rand on inflation. I'm a little bit worried about the impact on inflation. Been watching the rand for 25 years in the gold industry, in the mining industry. You usually find that you get opening up of the margins, and then inflation comes in and closes it again. So we've got to watch out for that we don't give it all away. We've replaced a third of the fleet, and you get a big kick up in availabilities when you bring in new fleet. We've seen that before over the years when we bought new fleet, so that certainly helped us. We've done a lot of work on making sure that the infrastructure is fit for purpose. I think it's fair to say that's work in progress. More work we need to do. And I think the morale on the mine has turned a lot, and if people are feeling more confident about themselves and their job, they will usually give you better results over time. And we achieved something we've never done in Q4. We had 38 injury-free days. Now that is a first for the operation. That means people are doing things better, they're doing things properly. Underground conditions have also improved. Secondary support installation. There's a backlog of many kilometers that's been built up over the years. We're starting to eat into that. A lot of work still to do, but the trends are positive. Injuries down, support up, and here's the physical conditions rating that also looks better than where we were. A couple of pictures help to tell a story, given that we're not doing a mine visit this time. Look how poor the footwall conditions are. Too much water on the foot, mud there. That's what it looked like. Now we've cleaned it up. Much better. Look at the bad support here. The support's hanging. We've got water pipes hanging. What have we done? We've tightened up all the support. We've put the mesh on properly. We've got the pipes under cover. Much better. So these are the kind of things that can improve an operation. We've often said that the success of South Deep is dependent upon de-stress. That's essentially the underground development. If you can actually get that up, you will create more face over time in the open stopes, which is the meat and potatoes of the operation. That's gone up. Open stope production has gone up, and the ratio has gone up as well. That's where the high grade, that's where the big volume is. Backfill production has gone up. Remember, we have to backfill all of these big voids. Otherwise, we can't continue mining. So we had a backlog of that. We're starting to eat into that, and development's going up. So the trends are all positive, and it's looking a lot better from here. Now, we've also changed the pillar layouts. We used to have 4 mining spans of 240 meters with 60-meter pillars, and we also had crushed pillars in between the MADs and the SADs, the main access drives and the secondary access drives, or stope access drives over here. So what have we done? We've decided to create a more stiffer structure. We're going to reduce the mining spans and keep the same stability pillars of 60 meters. So that's now been agreed. We've had independent geotechnical consultants who've been working with us for 2 years to actually come up with this change in configuration. So we're now able to move to a shorter mining span. Now we have 180-meter mining spans. We've moved from 4 to 6 corridors with 60-meter stability pillars in. And as a consequence of this, we've also brought in a little finger over here on the more distal part of the mine, 1 West, that previously wasn't in here. So that's given us a stiffer structure. That's going to mean that we're going to behave much better in terms of seismicity, to the extent that we have seismicity as a risk. And it should mean that we have a much better long-term sustainable plan with shorter mining spans. In addition to that, we've also put in bigger crush pillars between the MADs and the SADs. So that will also give us better localized conditions as well, and help us to make sure that we don't have closure. That's one of the risks that we have, is to reduce the closure. Previously, we were looking at closure of potentially up to 25% per meter. Now with the change system, we think we can reduce that by to a third, around about 80 millimeters per meter. So all around, I think this is going to be a much better design for us. Now, we're not giving you the reserves today because that's only going to be finalized in March, but we're not too concerned about the impact on reserves overall. So we don't think this is going to be fatal for South Deep. And if anything, it's going to de-risk the entire mining profile.